Thanks for joining us on the news at 1. Let's take a look at your market news now. Asian stocks continued their New Year rally at the start of this week, helped in large part by the lead provided by Wall Street on Friday. Japanese stocks closed up, that's despite a relatively stronger yen, with market heavyweight SoftBank lending support up 3% on news that it's set to list its mobile unit. The Nikkei share average rose by 0.3%. Hong Kong started the day on a high, making it a 15th consecutive day of gains, but profit-taking by the end of that session saw it close down. The Hang Seng Index edged down 0.2%. Now, after an 11-day winning streak in China, the index we track also faltered today, the Shanghai Composite Index losing 0.5%. Wall Street continued its rally on Friday with record closing highs as the fourth quarter earnings season kicked off with solid results from banks. Robust retail sales also drove investor optimism about economic growth. The Dow Jones Industrial Average rose 0.9%. The S&P 500 gained 0.7% and the Nasdaq Composite added 0.7%. Obviously today, US bond and equity markets are closed as that country celebrates Martin Luther King Jr. Day. Markets that are open today, Johannesburg Stock Exchange, we cross there now. Nompumelelo Siziba standing by. Good afternoon, Nompumelelo, over to you.
Thanks very much, Nzinga. Well, the all-share index in Johannesburg is trading in positive territory, pretty much in line with global markets. We're seeing resources doing particularly well. The gold price is up at a 4-month high, doing quite nicely, and that's been positive for the gold counters in particular. And in company news, we see that Woolies has put out a trading update to investors saying that it expects that for the 6 months ended 24th December, it expects that its profits may have dropped by about 17.5%. This was met unenthusiastically, with the stock coming down by about 9% earlier in the session. The rand, as for the rand, it's fairly strong, and that is in part due to a weaker dollar. Let's take a look at the indicators. Well, I'm joined by Bright Kumalo. He's a portfolio manager at Vestact. Thanks for joining us, sir, and Happy New Year, belatedly.
Thank you very much. It's lovely to be back.
Good stuff. US earnings season kicked off on Friday, starting with banks, and those were very good results. Global markets generally looking positive on the back thereof. Your thoughts?
Yes, I mean, we saw, like you're saying, they're kicking off the results season in the US. It's JP Morgan and Wells Fargo. Wells Fargo looking good, and that's thanks to, you know, the corporate tax benefits that they're going to experience. It was $0.67 for Wells Fargo, and for JP Morgan, the results could have been better, but you know, they've been rattled by the Steinhoff situation that we're all seeing here in our markets. So that's how far it stretches in terms of its impact on the financial markets. Okay,
we'll come to Steinhoff in a little while. Despite these positive US economic fundamentals that we're seeing there, good growth, very low unemployment rate and so on and so forth, we continue, and of course those good earnings reports, we continue to see the dollar trending lower. Is this the Trump effect?
I don't know how much of the Trump effect is cooked into the US dollar weakening, but we have seen even the emerging markets currencies strengthening against the dollar. So and I don't know, I'm not a currency expert. I can't say exactly if it's Trump's comment and most recently his tweet about the different continents and what he's named them, but there's always something new with Trump, and it's definitely not working to their advantage at this point.
Indeed. And here at home, Cyril Ramaphosa has said that the issue of President Jacob Zuma stepping down is something that will be dealt with in due course. To what extent might this be contributing to a firmer rand? Because we know that the market is President Zuma, or do you think it's just really a weaker dollar story?
Well, I mean, there's definitely both plays currently, concurrently, and we heard, like the president saying that you only step down if a certain person takes his space for now in the interim, which is that's not what we want to happen. But what you want and what will actually happen, it's two different things. And I'm sure it's that bit is definitely holding our rand, to its fair value. But the weaker rand does help us in the moment as well. But we did see in December when Cyril Ramaphosa was, anointed and was the guy, who's in line for the big job. We saw the rand actually strengthening quite a lot. So there is that effect, overhanging there.
And then I see that a group of European investors are planning on doing what they call a class action, a legal action against Steinhoff, and they're going to also include South African investors to try and get back their money. Now, I guess these are ordinary shareholders, and they're right down at the bottom of the pecking order in terms of paying back what Steinhoff owes. Steinhoff owes about 150 billion rands worth of debt. So presumably they're going to have to pay off those creditors first before they can pay off the ordinary. Is it worth them pursuing this class action?
Well, I don't know, but it's definitely worth it for the lawyers because they get lawyer fees either way. So that's why the lawsuit, I think, is there. In terms of where the cash is going to come from for the shareholders, I don't know. But actually investing in the markets, especially in the equity market, comes with its own risk. And this is a very good example here that if you're going to put your money, you have to do your research. And in this case, it happened to be fraud. And unfortunately, the share price is where it is today. We know everything is, it's history, as they say. But it's unfortunate that that had to happen and the shareholders had to take the end of the stick on that one. But I don't think they'll get not even as much as they think they could get with this Class Act lawsuit because, like you're saying, creditors take preference.
It's very unfortunate. Even the guy who was at the helm, Christo Wiese, he's lost about 80% of his personal wealth. Forbes ranked him at about $5.9 billion last year. Now apparently he's worth about 1.1 billion. So there was a real stuff up there that he shouldn't have even seen what was coming.
I feel so bad for him. But
poor thing, 1.1 billion.
Yes.
Okay, but anyway, let's move on to Woolies very quickly. They're coming out with a trading statement saying that they're likely to see profits down 17.5%. They're not doing very well. They haven't been for the past couple of years, have they?
Correct, and the effect there, the big drag on earnings is definitely the clothing side of things. I mean, you look into South Africa, the clothing is not doing well, but the food side, because they're still selling you good quality fresh food, up 9.4%, but the fashion, the home, and the beauty side of things not doing so well, up 0.6%. There's lots of competition there. I mean, I know youngsters who prefer to go to a Discount and Clicks rather than buy their beauty products at Woolies, and there's lots of promotional items in that market. And like I said to you earlier, that millennials they got the big bucks now. They have more earnings power and they've got more money than boomers currently. And their shopping habits are very different than boomers, the guys that used to spend before. So it's going to be tough going forward for these companies because we buy our stuff from Instagram, online stores, and it'll be a good one to watch. But these companies have to adapt very quickly to what's going on.
All right, Bright, we've run out of time, but thank you very much for your insights as always. People seemingly going to the internet to buy their clothing, and that's going to hit the retailers very hard, not just Woolies. After a short break, Nzinga has more business news for you.